So this one, it's gonna be a longer one, I guess. It's just adding up different arguments, I guess, and filtering out the highest probability pair, really, and then it's gonna have some random stuff at the end. Just how to use really ICT to spot bigger consolidating trends, just so you avoid those conditions and you only hop in the trending, because that is, I'm guessing that's what most ICT traders trade. So on Euro Australian dollar, this is the monthly. I think, what did I just explain? Australian dollar CHF, and so that one kind of that one was the last video. The one before that was that gold one. So that sort of added up to bearish, but a bit shaky for multiple reasons. And so this pair would have been a bit stronger, and I would have liked to have got in on this pair, but the times just didn't really add up for me. Anyway, so starting on the monthly, the first thing you see on first clue on the monthly that I got, that we can actually target higher, not lower, despite the graph, is that you came like one tick away from this low and then retraced. So as soon as you see that, that's suspicious, because you should not be getting that close to a draw on liquidity to retrace to then take it, because that doesn't make sense. Let's check out the weekly. Really see the same thing on the weekly, a bit more than a tick, but yeah, get the point. And then number 2 on the weekly, the second argument, you had this weekly fair value gap with the overlapping defense starting here, just below it. So quite strong defense, because it's still, even though it's not directly overlapping, it's still pretty clustered. But we had this candle which went and mitigated all of that, and a massive rejection. And so already when I see that massive rejection on the weekly, I'm thinking on the lower time frames, the lower time frame order flow should be following through if we're going to continue lower and actually reject off that. And also on the 2CR there, off this rejection, you're looking to disrespect this low for it to follow through. You're looking for it to disrespect this high for it to fail. So on to the daily. The third argument on the daily is that off this rejection, it creates no fair value gap on the order flow. Well, on the order flow, no fair value gap, therefore no order flow, really, because order flows are fair value gaps. So that is the third argument, and stinging here, not a highly convincing next candle for the rejection, but after that one, sweep this candle's low, I think, and then that one's a bit more convincing to say, yeah, we've stung into that, and we are continuing upwards, and now it is all no resistance up until here. And here you have daily context high plus order block here as well, which is quite nice. You got the two drawn liquidities really close. You got your first context high, which is highest probability of being hit, then second is the next resistance along. Because they're close together, when they're clustered like that, it just adds a bit more certainty that you are going to trade at least up to this, at least up to that context high, which is nice, right? So that adds a bit more to the argument. That's number 3. And then hopping on the 4 hour, got a couple here, no resistance already mentioned, but that's 4 hour no resistance as well. have I missed a number? I have. I've gone from 3 to 5, but no, wrong. This should be 4 then, but we're just gonna skip 4. 4 doesn't exist. 5 here. You've got the lower time frame. Detail of what we saw on the daily when I said no fair value gaps on the daily, therefore no daily order flow. Here you had fair value gaps on the 4-hour, but these civvies are failing to follow through, and because they're failing to follow through, that therefore adds to the bullish argument. 6, pretty nice rejection of this 4-hour fair value gap. That is the ideal entry really of where I would have wanted to get in, but just due to time, that was like in the middle of the night. You'd be looking at something like that, like a really, I would say that's 1 to 2, really easy 1 to 2, scalping the 4-hour, scalping the 4-hour there. In the next candle, it tops out, so relatively a lot quicker than even your 5 and your 1 minutes, because it's not often you just get next candle and you're done, so relatively it's faster. But truthfully here, you probably could aim for a bit more than a 1 to 2. 1 to 3 is also really in reason. It's quite close to the high here. To be honest, a 1 to 4 is also, as these trades can get pretty nice. 1 to 4 is also in reason, actually, but I probably wouldn't do that. But 1 to 3 definitely could do. So 6, the other, we're gonna say the 6th argument. Really, it's the 5th one. That adds to the bullish, and we've already said that one with the no resistance. So that was it. Just something I think like a pretty techie entry, because that would have been the ideal, but something techie you could have done, because now this is now you're having to, it doesn't even fit on. You're having to overshoot that a lot just because how big this candle was. So what could you do? You could either reduce your stop loss, something like this, because this is such a big expansion, therefore you've got the mitigation block here. You would not expect to trade all the way down through this potential fair value gap if you're going to make one here. You wouldn't expect to trade all the way through it. Therefore, this could be a somewhat refined entry, and then 1 to 2 is still fairly far past the next bit of resistance, although you'd be break even as soon as you hit this context. I think the techie entry, which is the most the most technical, would be, I think, so you take this, you don't want to trade below this on the 4-hour. If you've got your fair value gap and overlapping mitigation block, you would drop to the 1-hour, and here, coming into this 4-hour fair value gap here, you have your first hourly candle coming in, not really rejection, low close, swept, which is nice. What you expect off of these low closes if you are going to keep going with where the fair value gap's pointing you. Again, not too great of an up candle though, because it sweeps this side. Again, not too great of an up candle because it's just not great. And then this one, you finally disrespect this first one, the high of this first one, so you're respecting these, disrespect this, and then also this 1-hour resistance you have to bear in mind, because you just ran into that. So I also probably wouldn't enter just because you're running straight into resistance. It'd be after this one where you've closed above this mitigating high that's mitigated this resistance. You then enter on the top of that. And that is exactly what this box is. Is that just luck, or have I actually placed that? No, I'd placed that before. I was thinking it might be this one. And that would give you the 1 to 2 within the context area, but you can see you have to think a bit more for that. And also, look, this is a bit riskier because you're sort of gambling a bit more on what this third 4-hour candle is going to be. So that's why that is not, it's not the most ideal to do something like that. If it's a really great move, maybe, but you don't want to be trading the third candle one time frame above where you enter, because that third candle is prone to messing about, essentially. Let's put it in simple terms. But yeah, that's Euro Australian dollar, and you can see just how the arguments add up a bit better than Australian dollar CHF. I'll see what's happened on that, and this could be not quite stopped out, and we are on the 4-hour, right? Yep, not quite stopped out, but there you go. You actually did close that second candle just below. But again, I didn't enter just because of how the arguments added up, and you can see the other video on that. It's not my last video because I think that's just a basic gold trade. It's the one before that, some advanced analysis, and it's not looking great as I might have expected. And you also have the Australian dollar news in the evening, so even if you did enter, even if it was just chopping around, and then you get the red folder news with quite a small stop, that news could have also done you. So hence why I didn't enter. And yeah, I left that, and maybe it already gets stopped out. So we'll see with that one. But yeah, there is analysis for that. And then silver. Silver is the second last one, because then I've got my bit of a random tangent at the end for how you use ICT to predict consolidations, and something to do with that. So silver, I think this is more textbook. This is just sort of an idea, really. I think weekly rejection candle didn't really reject off anything this week. We're already rejecting again, respecting this low. We swept this. You can say you swept this on the weekly. So this is like a rejection followed by respect of this low and continuation. So maybe aim for this. You could possibly be aiming for here, but I mean, you could aim even higher because that's the swing high. Hop onto the daily. Daily, it's pretty simple. Sample. Yep. Overlapping defense. You had this civvy downwards with this overlapping breaker block. I think that's what it is. I don't really use the terms breaker block, order block, and mitigation block anymore. I just say fair value area. So yeah, whatever that is. Anyway, when that is gone, you are then targeting the last line of defense, which is technically all the way up here, but you probably go for some smaller target one on your entry time frame. But after you've seen these nice rejections, you're basically just looking for some sort of context, aka a fair value gap. So 4-hour. This is nice. This was the ideal place that I wanted to get in, but again, this was at a really awkward time. 6 o'clock New York. No, it's at the start of this one. 10 o'clock New York. I think that's some stupid time in the morning here. So this would have been the ideal entry with this, and that is a 1 to 3, and that's really clean 1 to 3. Obviously, you would have gone break even as soon as you hit that. The 1 to 2 was also higher, but it's no resistance, so yeah, no problem. And yeah, I honestly don't think there's really anything more to that other than, yeah, that was just a nice trade that I couldn't have got. Had some alert there if it retraced. I was hoping it would retrace into this fair value gap, but no, it's just continuing to run, sadly. What you have here as well, protected lows, intermediate term lows, and really your true intermediate term high is this boy here. But yeah, that's really it for silver. Just alright trade that can take. Bitcoin is the last one, and this is just something completely different. As I say, it's using ICT to predict, consolidate, or to see consolidation sort of coming, and see like the overall direction of a move, and that is using market structure, which I don't. Obviously, I just said about it there on silver. I don't actually tend to use it that much anymore on the lower time frames. But Bitcoin, that's the weekly. So basically, what you got there is fair value areas through swing movement. So here it makes a fair value area by this line, and so the best trend is like a breakaway gap trend, which is really strong. Second is fair value gap trend. Third is fair value area trend, which would just be a sting into the mitigation block, then continue. And then you've got a consolidating trend, which is you trace back into the fair value area a bit further, and then you kind of continue, or you go all the way to the other side, then you still continue downwards, which this is what that kind of is. And then after consolidating trend, you just have pure consolidation. This is kind of a mix between the two, but here you see 1, 2, 3 fair value area, really heavy retrace back into it, but then continue down. You now have a new fair value area there. And I haven't drawn this smaller one on, but because this is, you have a smaller one inside this larger one here. You then come all the way back into it, so now you're kind of thinking, will the sort of consolidating trend or consolidation break, and it will break to the upside, or will we snag this and then again continue downwards, or just continue downwards off of that bit there? Because if I now make the next drawing, if you actually include that smaller fair value area, it is then something like that, where you've actually kind of flipped it. You've made this fair value area now, so now you could possibly come back down, retest that, and then continue onwards. But it's worth bearing in mind that you're still within this bigger fair value area. This 1, 2, 3, you're still within this bigger one, so it could just be a retrace back in to then again dump. But we'll see if we can break it and bounce off of this, and if you create a fair value gap here on the weekly, that could be pretty nice to target higher. But yeah, that is the different type of trends and how you can spot them with basically mitigation blocks failing or holding, and seeing where the fair value gaps hold and stuff like that.